Kitco News special coverage of PDAC 2024 is brought to you by Gold Mining, Uranium Energy Corp, and Uranium Royalty Corp.
Hey everyone, welcome back to our Kitco News coverage at PDAC 2024 in Toronto, Canada. Now, very excited about our next guest coming here. We have Michael Stanley, lead mining specialist with the World Bank, and some might actually be surprised about the World Bank's role and what the initiatives are. So thanks for joining us.
Thanks so much, Jeremy.
Yeah, I'm so curious about this, Michael. I mean, you're obviously into innovation. You're obviously into different effects in the sustainable side with the World Bank. But I'm curious, what's your mandate here?
Sure. Our job is to lend money to governments, and we recognize that mining, if well done, if it's done the way we want to do it, with the way we see it to be done, it can be a leverage for economic development. So we're working with governments where investments are coming into the mining sector, and we're making sure that they have positive externalities, they help to create jobs, they help to create infrastructure, revenues flow to the government. So that's our mandate.
It's interesting, talking about the positive sides of the business and kind of trying to get more innovative and more business going in terms of mining, juniors specifically. I'm curious what your conversations are like here. I mean, we're at a time where access to capital is really difficult for junior miners. Where are we at economically?
Yeah, it's actually really tough. It's a tough macroeconomic story out there. Right. Every 6 months, the World Bank publishes the economic prospects. This is the slowest start to a decade since the 1990s, early 1990s. So it's tough. There's limited access to capital. Mm-hmm. We recognize that for the energy transition and the population growth, we need a lot more metals to come into the market. Right. Yet at the same time, they can't access financing. One of the challenges that we think we can help address is risk and this perception of risk. So investors are looking at different countries, they see risk, and it's probably on the policy side or on the way that the sector is being administered. So we can come in and offer assistance to help to try and de-risk that for investors going forward.
So what's the conversations that you're having with the insiders? I mean, people excited about this movement, and more specifically, as we're here in Canada, I mean, obviously, very rich in minerals in this country. Sometimes policies not so much. Are we getting more and more forward? Are people starting to understand that we actually need what's in the ground?
I think there's a broad realization of this. Frankly, 10 years ago, I don't think that was the case. But today, most people have come to realize that the energy transition and just this massive population growth and urbanization requires a lot more metals and minerals going forward. The United States government, through the Inflation Reduction Act, have really sensitized, I think, the media and the world at large on the importance of metals and minerals. And from that, other governments have come in. Canada, European Union, and others are introducing policies now for critical minerals and basically the carrier metals like copper that are necessary for just broad economic growth.
So what does it look like working with a country like Canada, for instance, or the U.S.? I know that obviously the headquarters is in D.C. Do you go forward with those policymakers first and try and put some capital inside of this country particularly, or what's the idea?
So we're a lending institution, right, a development bank. We don't lend to U.S. and Canada, but we recognize that the U.S. and Canada and the European Union and other places have very strong lessons learned on policy for the mining sector. So we're taking the best of that to other countries so that they can come to appreciate having a strong policy, well implemented, that's predictable, it's transparent. That's the way to go. That creates confidence with investors. So if an investor can look at a country and say, I might invest there, and we're able to say, okay, we're working with that government, we're taking the broad experience from all of these other OECD countries into there, it builds confidence for the investor to invest in that country.
Right. So what's some experience here in terms of countries, developed countries or undeveloped countries that are wanting to, produce more minerals?
Sure.
And extract?
Yeah. I think that you'll find that a lot of the developed countries have strong policies on infrastructure. So if you're doing mine development, the ability to bring in goods and services to the mine and to take out the ore requires a lot of heavy infrastructure, road, rail, port facilities. A lot of the OECD countries or the advanced economies have actually built that infrastructure to catalyze the mining industry, recognizing it makes the mine more profitable and it creates more mines around it because they get translated by the fact that you've introduced this infrastructure. So that's a model that we are taking to a lot of countries of the world today, that a development organization like the World Bank and other partners can come in, we can help to build that infrastructure. And that's like a roads to resources policy. So in the policy space, we say to them, this will create more jobs, more economic value, And frankly, it will contribute to that global inventory of metals and minerals that we require.
Is there any countries that you're excited about right now, working closely with, that are kind of developing at a pace that, maybe it's outside of U.S. and Canada?
Sure. So we work with emerging economies and developing economies. We're excited by all of them. I would say that across the board, there's a lot of interest in Latin America, quite obviously. The Americas form kind of a corridor now of mining development.
Right.
That's a good one. We're always excited about Europe, Central Asia. A less appreciated area is that eastern, the Caucasus and going into Kazakhstan and Turkey and place. So that's an important area for us. Africa is always important for us because Africa is a minerals warehouse. It's underexplored, it's underdeveloped, and there's so much opportunity for us to do this in Africa. And of course, in East Asia, it's a slightly different story where we're looking more at value addition, where countries that are producing today may go a little further downstream in terms of making products from their mines.
Interesting. How does a company not the company, an organization like the World Bank work with, we're going into election years in a lot of countries. I think we talked a little bit about this, and that most politicians might enact something else in their predecessor or whatever, what have you. How does the World Bank work with policy changes?
So our message of many years is the following. Introduce a policy that is stable and predictable, and it's transparently implemented, right? So if there's going to be a policy change, we work with the government to understand, is this a positive, right? Will this help to grow the economy? And there are changes taking place. Governments are looking for more jobs. Now, mines themselves are fairly limited in their number of jobs that they have, but they can catalyze jobs around them through goods and services, the small to medium enterprises that sell goods and services to the mine. So if it's a policy change to stimulate broader economic development, we're all for that. If it's a policy change that the mine can help to electrify a part of the country, we're all for that. We're really looking to have development like we want to see it, where the mine is a catalyst for broader economic development. It'll increase revenues, it'll increase jobs, and you get technology transfer into these countries.
Yeah, it's interesting, I think we were talking a little bit. It takes about 20 years to get permitted, get into the ground, extract the minerals, and hundreds of millions of dollars. And I think people are starting to just wake up to the fact that, we can't start this new and we can't just start it now. So we've seen the green revolution take place. We've seen a little bit of maybe some stabilization on the ESG fronts. What's the World Bank's view in terms of, extracting minerals, innovation, and technology?
Sure.
Sustainability.
Let me go to your first part of your question. It is taking about 14.9 years on average to go from discovery to metals into the market, right? For us, it's 2024. An important date is 2035. It's halfway to 2050, which is only 25 years from now. And that's when a lot of the infrastructure that's necessary for decarbonization of the energy system has to be in place. It has to be built. And so you actually only have about 11 years to get that into the market. And we are 14.9 years from discovery to moving that metal in. So in terms of innovation, we need to find ways to accelerate this process, get more mines flowing, and frankly, find ways to decarbonize now with the metals and minerals that we have, knowing that there may be some delays going forward.
And how do you convince, the miners to invest in R&D such as that and maybe some more sustainable practices while it's so hard to grab capital? They're focused on paying other bills.
I have a lot of confidence in the miners.
Yeah.
I think we'll find that R&D is always a good investment. And so I'm of the view that even if they can't do as many projects in as many countries, they will continue with that R&D because that's what keeps them at that front end. I'm of the view that probably going forward, we'll see a lot more collaboration in terms of some R&D with the downstream companies. So the major motor manufacturers, like the automobile manufacturers, cell phones and other technologies, they're probably going to partner and share a lot of technology, and you'll see a lot of technology leapfrog going forward.
So what's the most exciting technology that you're kind of looking at? I know we probably can't hone it into one, I really like this, but you're having a lot of discussions out there. Where are we going to be in this sector in mining in the next 10, 20 years?
I think in metallurgical processing. So if you look at the way that we've taken a metal out of the ground or a mineral out of the ground and process it, probably it's been high carbon, it's energy intensive, and frankly, in a lot of instances, they've used coal as their energy resource. I think we're going to see a lot of technology shift to new forms of mineral processing using high temperature, high pressure acid systems, and that will allow us, with a lower carbon footprint, to move a lot more metal into the market.
Michael Stanley, I wish I could keep you all day. It's fascinating, and I could keep talking about the World Bank's approach. I'll leave it at this, though. I know we're out of time. Thank you for joining us today. Great to meet you.
Pleasure.
And thank you for tuning in to our Kitco audience here at PDAC in Toronto. I'm Jeremy Szafron for Kitco News. Don't forget to subscribe to our channel and go to our website for the latest.
Kitco News special coverage of PDAC 2024 is brought to you by Gold Mining, Uranium Energy Corp, and Uranium Royalty Corp.